This is the August Gold Weekly Technical and Fundamental Report for the week ending June 17th, 2011. August Gold opened the week sharply lower as the U.S. dollar gained strength due to the lingering concerns about sovereign debt issues in Greece. While the European Central Bank and Greece government officials worked to hammer out a new bailout deal, the gold market steadily regained its composure, finishing slightly better for the week. The best way to describe the gold market at this time is sideways and trendless. Since the sharp sell-off the week ending May 6th, gold has remained inside of a wide range bounded by 1,577.40 to 1,464.10. There's a slight bias to the upside building now that gold has regained this range's midpoint at 1520.90. Falling back below this level is likely to mean that sentiment is turning against holding the precious metal as an investment. On the bullish side of the equation, the strength in the U.S. dollar has pressured gold priced in dollars. This makes the yellow metal more attractive to foreign investors. Uncertainty in the global financial markets because of concerns that Greece or other Eurozone peripheral countries may default on their debt has also been linked to higher gold prices. However, news late in the week that a new government agreement to aid Greece has been reached could ease these fears, causing some long traders to reposition their holdings. The clash of the fundamentals is one of the reasons why investors remain uncertain about the direction of gold market prices. The resiliency it has shown in the wake of recent investor liquidation of risky assets has created a slight upward bias, however. Stripping out the uncertainty in the currency markets along with the slowdown in the global economy are two reasons why gold may feel pressure next week. Factors that may affect gold next week are the lowering of speculative margins at the Chicago Mercantile Exchange. Due to lower volatility, the CME Group decided to lower the amount of money investors must deposit to hold gold futures positions. Although it is uncertain how investors will react, lower margins typically bring new liquidity and fresh buying to the marketplace. The U.S. Federal Open Market Committee meets on June 22nd to decide the direction of interest rates. The consensus is the Fed will leave interest rates unchanged, but gold traders will be hinged on how the Fed responds to reports of higher inflation. Recently, the Fed called higher inflation transitory. Gold investors will be watching to see if the Fed has upgraded its concerns as to whether higher inflation is on the horizon. Third factor affecting gold next week, Eurozone sovereign debt issues. Gold investors will be watching to see if debt concerns continue to linger in Greece or spread to other peripheral nations such as Spain, Italy, and Portugal. Although a verbal agreement between the ECB and Greece has been reached, there is no guarantee that discussions won't stall or that the agreement won't fall apart. This will create a volatile trading environment. So to recap, gold remains inside of this wide range created during the week ending May 6th. And you can see that it is retraced slightly above the midpoint of this area. Should the fundamentals turn favorable, gold is likely to build a support area above the 1520.90 point and make an attempt to retest these highs at 1577.40. If the fundamentals turn bearish or if inflation begins to slow down, then gold may feel pressure, and we could see a retracement back into this 50% area at 1483.75. This has been the August Gold Weekly Technical and Fundamental Report for the week ending June 17th, 2011.